So there's only just a few weeks to go until the end of the tax year, and in keeping with tradition, I thought I'd just give you a few reminders that will not be in any way revelational or shocking of the income tax and investment planning opportunities. They are just reminders as we lead up to the beginning of the next tax year and the end of this tax year. So we'll start with income tax, and quite obviously think about using the allowances. The personal allowance of 11,500, the personal savings allowance, the nil rate starting band up to £5,000. The personal savings allowance that I just mentioned stands at £1,000 for basic rate taxpayers, £500 for higher rate taxpayers, and a big round nothing for additional rate taxpayers. And remember also the dividend tax allowance of £5,000 this year, that's tax-free £5,000. All very well, but unless you have control over your income, or perhaps more to the point, the capital or the business that delivers the income, then you're not going to be able to do very much at the last minute. By the way, to preface all of this little reminder section, we need to remind ourselves that we should only be thinking of tax planning that is going to be HMRC acceptable, and also reminding ourselves that actually the best planning is the planning that's done throughout the year, ahead of the year. Plan early to make the most of it. So going back to these allowances, how can you use them if you're right up at the end of the tax year? Well, it's going to be quite difficult. If you can control the income though, because you run your own business, then you could, oh damn, I didn't pay my dividend this year and I've got a tax-free dividend allowance. Or I could pay a personal allowance to a spouse that works a bit in the business. Yeah, absolutely do that, because you can control the flow all at once to use the allowance in the last couple of weeks. If you can't, then it's going to be really hard. In relation to investments, for example, in the market, you can't tell an investment manager to pay you a dividend now because you need to use your dividend allowance up, obviously. Remember though, of course, investment bond gains they count as savings income, so that if you have a bond and you're thinking of taking some money out, then and you have one of those allowances available that applies to savings income, like the personal savings allowance or the nil rate starting band, which many people won't, but some will, then an investment bond gain, particularly an offshore bond gain, could be a way of using that. Okay, that's income tax, quick reminder. Obvious investment opportunities, the ISA allowances, use it or lose it basis, just £20,000, and of course the just over £4,000 ISA allowance. If you haven't used it, do so. Remember that maybe for some of your clients they're on a regular savings pattern and they might not have upped their regular savings the last time that the ISA allowance was increased, so there might be a gap there. So ISA allowance, use it because you will lose it otherwise. It's a very valuable allowance to have, of course. And of course, what we also have is the pensions allowances, so far as they remain available to you, subject to the annual allowance and lifetime allowance. Always makes sense to think about maximising the use of pension allowances and the carried forward unused allowances from the past 3 years. Then we've got the more specialised investments, tax advantaged investments, although what we've just talked about is tax advantaged, but so-called tax advantaged investments in the shape of EIS and VCT. Now there's a one-off, there's a 30% tax credit, of course, for investments in those investment in those types of plans. EIS up to £1 million, VCT up to £200,000. And for an EIS, you can carry that relief back 1 year. So you can use it for this year or carry it back to last year. VCT only available in this year. So if you're really interested in and motivated by front-end tax relief, then aside from pensions, you've really just got the EIS and VCT to consider. Now, if they work for you and they're okay in relation to your risk profile, then of course go ahead and consider them. So there we are, a very short, possibly not very sweet summary of the reminders of what to do at the end of the tax year. The biggest reminder I can give you though is to certainly have a look at Techlink, because our year-end tax planning library document is very good, if I say so myself. And think ahead for next year, because planning in advance will give you the best opportunity to maximise the use of those allowances.